Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. The Israeli government approves a deal for Hamas to release the remaining hostages in Gaza in exchange for more than 2,000 prisoners and detainees. A move widely seen as a major step towards ending the two-year devastating conflict. U.S. President Donald Trump says he'll travel to Israel to be on hand for the release of hostages, saying the exchange could happen as soon as Monday. And the dollar set for its best week in almost a year, with global political risks in focus amid a lack of U.S. data. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. We're going to talk more about the Gaza phase one of that Gaza peace deal and the fact that it's now been approved by the Israeli government. And of course, the next 72 hours is going to be crucial in terms of the administering of the release of the hostages in exchange for those prisoners. So big focus of our show today. Markets, what we saw yesterday, Wall Street taking a dip, so a pullback for Wall Street by the end of the day. Today, futures leaning towards the green, marginally so. But again, the narrative is one of perhaps this market looking a little bit toppish and signs of things beginning to peter out as we continue to make record high after record high. But the shutdown continues. No signs really of political thawing between the Democrats and the Republicans. And what's interesting is over the course of the past week, the USD has actually done pretty well. And actually, if you scale it back, it's sitting at the highest levels for the last 2 months. So strength in the greenback, a bit of an anti-consensus trade here because so many people have been bearish on the dollar. Gold now through $4,000 to the downside. So we're still very close to those all-time record highs. But again, some consolidation coming through around these levels, slipping a little bit in early trade this morning, down 0.3%. And then Brent holding in at around $65, down 0.3%. We've seen some downward pressure come through the last couple of days as that geopolitical risk premium in this part of the world comes out. But of course, a lot of attention still on what's happening in Russia and Ukraine, with energy infrastructure being hit and targeted on both fronts, actually. So something to keep an eye out for there. Switching over, I want to draw your attention to something that's actually specific to automakers, but this is important to flag because Ferrari, and you can take a look at Ferrari, that's no surprise, the red line. I wonder why. Massive price drop yesterday in trading on a very cautious earnings outlook. It dropped around 14% throughout the course of the day, or 16% throughout the course of the day yesterday. A big laggard on the Italian index and on automakers as a whole. And you can see just in the last couple of weeks, there's been a lot of downward pressure once again on these automakers. And you will recall, of course, there was negativity into the sector around Liberation Day, those sectoral tariffs. And even though some countries managed to carve out exemptions, the outlook from a sales perspective, and I'm not even just talking about EV, I'm talking about actual ICE cars, seems to be pretty cautious. And you're seeing that with some of the key names in the region and the European region, BMW, Ferrari, but that's also having an impact on Asian names as well, Toyota and Honda. So something to watch out for in the automaker space. Okay, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, you talk about the Japanese auto stocks coming under pressure. We are also seeing Japanese tech names, including SoftBank, that was surging ahead just a day ago, also coming under pressure. And a lot of the concerns that were reflected in the US session about lofty valuations, that's mirrored in Asia as well. I mean, it's very telling if you think about the likes of how TSMC, they had those really strong numbers, monthly sales, but the ADRs still came under pressure. Taiwan markets shut today, by the way, but you can see those concerns also being reflected in Chinese tech names, for example. There's another sort of headwind for Chinese stocks in the form of reporting that some retail investors have received notifications from online brokers that they'll no longer be allowed to borrow to buy certain companies because of very high PE. So again, the focus on very high valuations. The outlier today in terms of tech stocks doing well is the South Korean Samsung Electronics, SK Hynix, because South Korean markets are back after a long holiday. So lots of catching up to do. Just highlighting dollar yen as well before I hand things back over to you, because we did get hotter than expected PPI numbers today. So ramping up pressure on the BOJ to continue its normalization. But how do you square that away with politics in Japan? We are watching out as well for some of the outcome from coalition talks between LDP and its long-time partner, Komeito. So that could be something else that markets are watching, paying attention to as well. Jumana.
Avril, thank you so much. Avril Hong in Singapore. Israel's government has approved the deal for Hamas to release its remaining hostages in Gaza in exchange for more than 2,000 prisoners and detainees. President Trump's son-in-law, Jared Kushner, attended the meeting along with his Middle East envoy, Steve Witkoff, in a move apparently meant to ensure that any holdouts would not upend Netanyahu's plan to get sign-off for the deal. President Trump says he'll travel to Israel to be on hand for the release of hostages.
Peace in the Middle East. We secured the release of all of the remaining hostages, and they should be released on Monday or Tuesday. Getting them is a complicated process. I'd rather not tell you what they have to do to get them. There are places you don't want to be, but we are getting the hostages back on Tuesday, Monday or Tuesday, and that'll be a day of joy. I'm going to try and make a trip over. We're going to try and get over there.
Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Dan, walk us through the developments of the last 24 hours. The Israeli cabinet has passed the ceasefire and approved the deal, but walk us through what exactly has happened and what we should be watching out for in the coming days.
Both sides have now formally signed off on this deal, a deal that really was a bolt out of the blue in the last 2 days, just under 2 weeks since President Trump announced this ambitious peace plan. Now it would appear that the first stage is in the works. We will have a 24-hour restructuring or repositioning of Israeli forces in the Gaza Strip, not a full withdrawal, a withdrawal within the Gaza to tactical lines meant to reassure Israelis that they still have overall control of that territory, a ability to protect themselves against any renewal of Hamas attacks, and also to enable Hamas to conduct the work on the ground required to recover, to bring out of hiding those hostages, not just the living ones, but hostages who were either killed outright on October 7th when this war erupted with that original Hamas attack, or died in captivity. Those bodies, some of them will be hard to retrieve, and Hamas says it needs the space and the time to do so. That means that within 72 hours, or the president said a bit more than that, those hostages should be back in Israel, a handover that will be welcomed across the board by Israelis and much of the world as well. It will be tinged with grief, obviously, for those families whose hostages died in captivity. There is some doubt about the status of 2 of the hostages, whether they're alive or dead. Also, the condition of living hostages, given that some were clearly emaciated in videos issued by Hamas.
And Dan, have we got any more detail as to what is going to happen with the humanitarian aid that's so vastly needed in the Strip right now, in addition to the monitoring mechanism to ensure that the ceasefire remains in place?
Yes, aid will be increased substantially. That will be welcomed by many Palestinians who will be given a degree of breathing room now, not just in terms of some increased movement in the Gaza Strip, but obviously a reprieve from Israeli attacks. A monitoring mechanism, that is more for the ensuing stages of this plan. We heard the president talking about peace. Indeed, his plan is called a peace plan for Gaza and the wider Middle East, and some of his aides are talking about the possibility of some Arab Muslim states even making peace with Israel as a result of this plan in Gaza. However, in briefings to the press, some of his aides have been speaking about a permanent ceasefire. It's worth paying attention to that terminology, because if Hamas insists on not giving up its guns, and indications are it will not decommission its weapons as required by this plan, or at least will request a serious review of those clauses, it's hard to see how the plan will be implemented in full. However, for now, everyone will be focusing on that critical first stage, not least as the president is due to visit the Middle East to be present in person.
Yeah, Bloomberg's Dan Williams in Jerusalem, raising some really interesting perspectives about some of the thornier issues that we need to think about. Let's speak to Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Good to have you with us, Ryan. You know, one of the, I guess, surprising images that came out from overnight was the fact that Jared Kushner and Steve Witkoff were present during that Israeli cabinet meeting. Is that just not a reflection of just how much pressure the U.S. administration has applied to both parties, including the Israeli Prime Minister, to get this deal across the line, and how personally vested President Trump is in this process?
Yes, I think this was an attempt to use that personality politics to force this right-wing Israeli government to do something that's not in its own political or even its strategic instincts, which is to sign on to a deal which doesn't give them certainty that Hamas will be disarmed, and it doesn't exactly give certainty that all the hostages will be released on the timeline that this plan promises. So I think this was the type of personality leverage that the Trump administration is very comfortable with being deployed against Netanyahu and being deployed against his far-right allies, who, after all, today voted against this very deal.
One thing that my colleague Dan Williams was saying is there hasn't been strong signaling from Hamas's part that they're actually willing to lay down arms. And they're obviously conflicting reporting on this front. But what exactly happens to Hamas from here? Because they've lost one of their key tools of leverage, which is the hostages.
Yes, and that's a major issue for Hamas's strategy going forward. Without the hostages, they, as you noted, they don't have that direct leverage over Israel's political system like they did prior, but they still clearly have the ability to threaten Israel through guerrilla attacks and insurgent strikes. And that means that the Israelis are still going to have to do one of two things. They'll either have to come up with an appeasement strategy for Hamas to get them to back away from an armed confrontation, or they'll have to go back to a military-first strategy by putting more and more pressure on Hamas to see if they can break Hamas's political will to continue this armed struggle. But it's important to note that Hamas is not a monolith. There's a political and there's a military wing. The political wing was nearly assassinated in Doha a few weeks ago. The military wing, on the other hand, they're hardliners. They're still in the Gaza Strip. They're still holding out to try to carry out the armed struggle in the future. For the militants, the hardliners within Hamas, this is a tactical pause, an opportunity to rearm, reorganize, and recruit for the next phase of the struggle. Whereas some of the leaders within the political wing of Hamas do seem to suggest that they're open to some sort of new process for Hamas to still exist in the Gaza Strip, but not as an armed faction or not as part of an armed struggle, rather perhaps as a normal political party or simply an appendage of a new type of governing organization for Gaza.
Is there anything that Arab states can do to restrain the military wing of Hamas that you were just referencing?
There's some limited influence that they certainly have on the personality front. Of course, Egypt is critical for the resupply of this military wing. If Egypt is still tightly controlling the Rafah border in the Sinai, it's very difficult for the militant wing to resupply. That also goes for humanitarian aid. And of course, reconstruction aid writ large. It's important to note that Hamas is very good at using dual purpose reconstruction aid to build weapons, using things like sewer pipes to make rockets and things like that. If reconstruction aid is not flowing in at scale, Hamas can't rearm. For that matter, Hamas will also be blamed by the population of Gaza, where it's hard to get polling out of Gaza right now, but many Gazans are very angry at Hamas after 2 years of war. And if they are seen as an obstacle to reconstruction aid, that'll weaken their legitimacy further and make it harder for them to rearm and reorganize. So it's really through that capacity to control the borders and to control aid that Arab states can wield some influence over Hamas.
Interesting. What do you make of the announcement that the U.S. are looking to move 200 troops already based in the Middle East to coordinate a multinational force? There's also some reporting that maybe some Arab states may be a part of this force that will be there to monitor the implementation of the ceasefire. How much impact is that actually going to have, do you think, on the ground?
Well, from a security standpoint, not a whole lot. And we actually saw a security violation almost right as the ceasefire is being implemented. A sniper killed an IDF soldier. And I think violations like that will be happening back and forth even during this ceasefire process. And so what the American troops would be there to do is to observe those sort of violations and then to report back to Washington as to who is to blame for the violations. They're also supposed to be creating this implicit threat to Hamas that the United States might take greater steps. Now, I'm very skeptical that the U.S. would ever get militarily involved in the Gaza Strip, but this is also supposed to be a signal to Hamas that the United States does have an interest in the Gaza Strip and is willing to deploy at least some forces into the area to monitor ceasefire violations and potentially to back Israel again if it seems like Hamas is responsible for the unraveling of the ceasefire. It's also likely that they're there to help try to put together some kind of security force very likely Arab-led, could involve the Emiratis, the Egyptians, the Jordanians, who could be a security force to take over Gaza in the much more distant future, probably 6 months or more down the line. But I think the United States troops that are there are going to be part of trying to build up that force as well.
Ryan, always good to chat to you. Thank you so much. Ryan Bohl, Senior Middle East and North Africa Analyst at RANE. Now, still ahead, JP Morgan Private Bank shares its investment playbook as the U.S. shutdown drags on and geopolitical risks linger. This is Bloomberg. Bloomberg has learned that the U.S. Bureau of Labor Statistics has recalled staff to prepare the September CPI report by month's end. The Bureau had suspended releases since the shutdown, and the development opens the door for fresh data before the Fed next decides on monetary policy. Joining us now is Stephen Rees, Head of Investments for MENAT at JP Morgan. Look, I mean, the shutdown has thrown many of the data readings into disarray, and obviously this news out of BLS overnight that they're looking to get together the CPI data in time for markets and before the next Fed meeting. But at the same time, you look at the performance of U.S. equity markets, you even look at the performance of the USD, and the shutdown hasn't had that much of a tangible
Yeah, and we've
effect.
been through this many times in the past. And so, yes, the shutdown will have an economic impact. It's about 15 basis points of negative impact for every week that it's shut down. But the market knows that this is temporary. It will get fixed, and that growth comes back, and which is why the market's not really focused on it.
Sort of brushing it off. Okay. You're in the region, chatting to people here. What is sentiment like right now? How are people feeling about the state of the world?
It's been great to be back. I was last here in May. I'd say the sentiment has improved pretty dramatically. I think clients are more optimistic, especially given the news we're seeing here over the weekend, which should be very positive. But I think very optimistic in terms of expecting better growth next year, but also the performance of their portfolios. And we went out strong this year with a multi-asset approach, equity, fixed income, a lot of gold. And all of those factors have contributed to strong performance.
Can I just ask you, geographically, remember a few months ago everyone was questioning the thesis around U.S. exceptionalism.
Yeah.
Is that gone now? Do the clients that you speak to want to be involved and invested in the U.S.?
They do. I think they see what you get in the U.S. is a lot of excellent growth companies, a lot of tech, a lot of AI, and those are all areas that we want to be invested in for the long term. But we did take a more global approach this year. We saw opportunities in Europe, and so we never pulled back our EU exposure, but we really looked to complement that with other regions. And those have also done well, and the valuations are actually much cheaper. I mean, there's a lot of concern right now around U.S. valuations, and we share that. And so we do think global is the way to go going forward.
What have your clients done about hedging the USD or maybe allocating less to the USD? I mean, there's obviously been a tangible impact on that market this year. The greenback has massively underperformed.
Yeah, because we cover clients here in the region, there is a lot of focus on the U.S. dollar, but I'd say this is the first year where we really saw more interest in investing in non-U.S. dollar assets. And this is why clients have been doing more Europe, more non-U.S. equities, more gold. I think the concerns around the U.S. fiscal situation and the dollar in general has been one of the factors that have contributed to the all-time high in gold. So I think all those factors combined have allowed clients to be a bit more globally diversified and not rely too much on the dollar.
You look at where gold is trading, close to $4,000, massive run up as of late. Again, a huge drop in the USD year to date, but both of those assets seem to be stabilizing now. You've had a couple of weeks where the dollar's actually done okay. Gold seems to be topping out at around 4,000. Has the easy money been made on those trades?
I don't know if the easy part's been done, but if you think about what drove gold, central bank buying, inflation concerns, a weaker dollar, concerns around the U.S. fiscal situation, all those factors, I think, will continue into next year. Of course, geopolitics is the one area that looks a lot better today than it did perhaps 6 months ago. But I think a lot of the factors driving gold will stay.
In fairness, and we spend a lot of time on this show talking about the geopolitics of the region, around the world, but markets never tend to react that much to geopolitics.
Well, gold did. I mean, gold was down over 2% yesterday. It was the thing that moved the most. And so I think if you don't have a full allocation to gold, you should use days like that to add.
Yeah. How are you thinking about exposure to Asian equity markets? And again, a lot of focus there on what some of these big Chinese tech companies are doing in the AI race. Are you recommending for clients to get exposure?
We are selectively. So I think there are parts in the Asian market that look good. The valuations look actually really good versus U.S. And so it's about finding companies that can grow consistently over the next few years and not paying a very high multiple for that. So we do have selective exposure to Asia. But it's still selective. We see better broad growth in the U.S. looking into 2026.
Okay. And then final question, let me ask you, is given this multi-asset conversation that we're having, U.S. fixed income, it wasn't that long ago that the bond vigilantes, as far as U.S. is concerned, we're talking about 5% being the next level. And you look at where 10 years are trading, and they're closer to 4% than 5% these days.
Yeah.
What are you recommending in fixed income? An underweight position ahead of anticipated fiscal pressures turn premium, or do you think this is an opportunity to get long?
We think it's an opportunity to get long. We're still overweight fixed income. It's been a main driver of our multi-asset portfolios, and we do think the Fed will continue to cut. And so we're advising clients to really rethink how much cash they need and to move out of that cash into very high-quality U.S. dollar fixed income in the medium part of the curve, so looking out 3 to 4 years to sort of lock in those rates. But a lot of our fixed income managers have delivered equity-like returns this year, and I think next year can be not as good, but still a driver of the overall portfolio.
All right, fantastic. Stephen, thank you so much.
Thank you for having me.
Rees, head of investments for MENAT at JP Morgan. And coming up, South Africa's Reserve Bank governor says the preference is to keep inflation at the bottom of the target range. Our conversation a little later at this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Saudi Arabia's sovereign wealth fund is delaying several planned stock sales due to weak market conditions and low valuations. Bloomberg has learned some of the deals, including Saudi Global Ports and others, are likely to be pushed into 2026. The public investment fund is waiting for market appetite to recover before proceeding with large follow-on share sales. And Saudi Arabia is trying to fix its soaring property market in Riyadh to attract more foreign talent and businesses as part of its Vision 2030 plan. The government has introduced reforms, including a 5-year rent freeze and increased taxes on underdeveloped land to encourage more construction at lower prices. These changes are aimed at making Riyadh more competitive with regional hubs like Dubai. And coming up, President Trump says he'll travel to Israel for the release of hostages and hopes the deal between Israel and Hamas can lead to everlasting peace. We'll have more next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The Israeli government approves a deal for Hamas to release the remaining hostages in Gaza in exchange for more than 2,000 prisoners and detainees, a move widely seen as a major step towards ending the 2-year devastating conflict. U.S. President Donald Trump says he'll travel to Israel to be on hand for the release of hostages, saying the exchange could happen as soon as Monday. And the dollar is set for its best week in almost a year, with global political risk in focus amid a lack of U.S. data. Well, it's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's get you through these markets. A bit of a pullback for Wall Street yesterday. Today, S&P futures trading sideways. Still no major progress in terms of ending that shutdown that's existing in the U.S. But I've got to say, markets have by and large been brushing those domestic political concerns aside. Wall Street very close to all-time highs. S&P futures, even though they dipped back yesterday, again, have been making record after record. The USD also interesting. Today we're down about 0.1%, but again, the theme has been one of support coming through for the USD over the course of this shutdown. We've actually rallied about 0.4% since the shutdown began. Gold through $4,000 to the downside now, so some consolidation coming through, down 0.5% this morning, perhaps. Some of those geopolitical concerns being priced out of the markets, given the price action the last couple of days there, with gold down 2% yesterday. And then Brent sitting at around $65, down 0.4% this morning. And switching over, just a quick look at how some key automakers have been performing. Ferrari was in focus yesterday, really sharp move downwards with a cautious earnings outlook coming through that has pulled down all of the automaker sector. European cars, the likes of Ferrari, Volkswagen, BMW, all dropping in sympathy, and that's also having an impact on some of the Asian automakers as well. So we spent a lot of time throughout the course of this year talking about some of the challenges, the headwinds facing the auto industry, not least those tariffs. And indeed, it's beginning to show up with some of those more cautious earnings outlooks coming through from the European auto space. Okay, back to our top story. Israel's approval of a deal with Hamas to release any remaining hostages, as President Trump says he will be there for the hostages' release early next week.
We reached a momentous breakthrough in the Middle East, something that people said was never going to be done. We ended the war in Gaza and really, on a much bigger basis, created peace. And I think it's going to be a lasting peace, hopefully an everlasting peace.
Joining us now is Oded Ailam, a former Counterterrorism Division Head at Mossad. Good to have you with us on the show. Very good to have your perspectives today. We're listening to President Trump talking about everlasting peace. Let me ask you, from the Israeli public perspective, is this a short-term ceasefire, an opportunity to see the release of those hostages after 2 years of waiting, or is it actually a pathway to an enduring peace?
First of all, thank you for having me. I wouldn't rush right now to buy equity in Gaza, and I don't see an everlasting peace occurring right now, simply because of the fact that the process of dismantling the Hamas is going to be quite long and unstable. Right now, the Hamas had agreed to start the negotiation on the second phase of the agreement, simply because of the fact that the Israeli military pressure on them that had moved around 800,000 Palestinians from Gaza down to the south, was an immense blow to the Hamas efforts to maintain their stronghold in Gaza. Second, of course, is the President of the United States, and Netanyahu. And third, we have a new player in town, which has a huge effect on the Hamas, which is Turkey. I would say the new dancing queen that has an immense power over the Hamas. So right now, it is for sure that this first phase of the agreement will be initiated. I don't see, even there are some obstacles and stuff like that, I don't see anything that can hinder that. Regarding the second phase and long-lasting peace, I'm much more skeptical.
What does demilitarization of Hamas actually mean, in effect? It's a word that's being thrown around a lot, but what does it actually mean, the full disarmament and neutralization of Hamas? What does that mean?
It means something very simple but very difficult to achieve. The Hamas no longer has the military capability of inflicting any sort of attack or damage or terror acts against Israel, which means that they have to submit all their weapons, their ammunition, dismantle this huge tunnel system that the world never seen before. And this is something that I consider a very difficult phase, not because the Hamas are afraid of the Israeli military, but they are more afraid of internal clans and tribes that will try to backlash against Hamas when they are dismantled. So I don't see right now in the feasible future this possibility.
Okay, so if the disarmament is not achieved to the level that Israel would like to see, is it then right to expect that these attacks could ensue once again, i.e. the ceasefire could lapse because of insufficient progress on disarmament?
The ceasefire, the second phase of the ceasefire will be very fragile, and Israel will have to take and monitor very closely any sort of rebuilding of the Hamas force in Gaza, and we have to restrict it in the same way that we are doing that in Lebanon. And this is going to be a major obstacle because of the fact that there will be foreigners and foreign forces within Gaza. And so it might be quite a difficult task for Israel to take care of whatever we see as a threat. Let's not forget, I don't see anyone from Dubai or from Egypt or even from the United States running down the alleys of Sajaiya trying to dismantle the Hamas. It won't happen. It will have to be taken care by a coordination between Israel and whatever forces are within Gaza, and it is a complicated business.
Okay. I want to ask you about something else, which is why the Israeli Prime Minister signed on and the Israeli cabinet signed on to the deal. It was really interesting to note that Jared Kushner and Steve Witkoff were both present during the cabinet meeting overnight, and really a reflection of how much vested interest the U.S. has in this process. In the absence of President Trump pressure, would Israel have signed on to this deal?
I don't think so. I'm reading what is written about it and so on. I think this deal was crafted between President Trump and his team, of course, and the Israeli Netanyahu and Dermer. I don't think it was a pressure by the United States on Israel to sign the deal. They didn't take the Israel hand and say, sign it right now. No, I think it's both in the interest of Israel and the Netanyahu administration and Trump to sign the deal. So it's more of a formal way, the fact that the delegation, American delegation, attended this cabinet meeting. I think it was a signed deal.
Oded Ailam, thank you so much for joining us on the show, former Counterterrorism Division Head at Mossad.
Thank you very much.
Now, some breaking news just coming through. Thank you. So some breaking news coming through from SoftBank, and this is just another day where you have OpenAI in the news again. SoftBank in talks for a $5 billion margin loan backed by arms stock. But this is interesting. The capital is going to be used to fund additional investment in OpenAI later this year. So yet another day that we're talking about OpenAI perhaps being the target of all of these discussions, various partnerships inked this week with the likes of AMD. Earlier in the week, that stock went soaring. But now SoftBank in the news saying that they're looking to borrow $5 billion to fund additional investment into OpenAI. And this seems to be one of their big bets. OpenAI, Masayoshi Son, obviously known to be not going small when it comes to tech investments, and this is just another manifestation of that. So, so far, SoftBank has raised a total of $13.5 billion in margin loans from ARM shares, with $5 billion still undrawn as of March 2025, according to its earnings statement. So that news just coming out now. Now, turning to Norway. Norway is bracing for the aftermath of the Nobel Peace Prize announcement as the nation faces pressure from President Trump to award it to him. The Norwegian Nobel Committee has signaled that Trump's pressure has been futile, saying the decision on this year's award had already been made on Monday. Trump has continued to push his track record in peacemaking, saying he has stopped 8 wars and deserves the Nobel Peace Prize. And coming up, the ADNOC is set to pay out $43 billion in dividends by the end of the next decade. Up next, we talk to Peter Van Driel, CFO of ADNOC Gas, to find out more. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Abu Dhabi National Oil Company plans to ramp up dividends from its listed subsidiaries to over $40 billion by the end of the decade. The company's gas processing arm, ADNOC Gas, will contribute close to $24 billion of that total. For more, we're now joined by Peter Van Driel, CFO of ADNOC Gas. So, you don't have to be a math whiz to determine that, more than half of those future dividends are going to be coming from ADNOC Gas. I guess this is really just a reflection of how strong not just the business has performed, but your outlook going into 2030.
Absolutely. ADNOC Gas has a market cap of $75 billion. So it's a large company in the portfolio of ADNOC. And I'm quite pleased to now basically signal to the market how confident we are in our growth ambitions. We're going to spend $20 billion. That's committed capex. We're going to grow our production capacity by 30%, and our EBITDA will grow by more than 40% in the period up to 29. And we want to share with our investors that success. And that is why we've said we're going to extend the dividend that grows every year by 5% up to the period of 2030. It is really a testament to the confidence and the success of the growth of ADNOC Gas.
Yeah. Can I just ask you, sort of macro outlook questions? I've been reading a lot, the last couple of days about the huge amount of supply of LNG that's going to be hitting the market over the next couple of years. Are you anticipating a supply glut in the next few years in the run-up to 2030?
So, Ruwais LNG is one of the company's entities that we invest in. It's a large project that will add 9.6 MTPA to our portfolio. At the same time, ADNOC Gas is also the entity that supplies the processed gas to Ruwais LNG. So ADNOC Gas will benefit as a supplier of the gas to Ruwais and also as a shareholder, 60% of Ruwais LNG. Now, this project will sail its first cargo late 28. And it's very impressive to see that we've been able to sell 80% of all these volumes already back in 24. So in that sense, the company has been able to position the project very well in the market, 80% of the contract sold, and that gives us quite a lot of resilience. And in that sense, we are less impacted by what happens in the market. The buyers want security of supply, and we're able to offer the buyers such security.
What about signals coming through from within the UAE? What does the gas demand picture look like here? Again, with the view that there has been a massive build out, especially in data centers, and that requires a lot more power. How does the domestic picture look?
The domestic market has been extremely strong performance for ADNOC Gas. You will see that we will flag for the third quarter that again, in a lower oil price environment, some 14% lower, we're going to deliver $1.3 billion of net income. And part of that strong performance comes from the local market. If you look at the GDP growth and the population growth in the UAE, everybody then uses our energy, right? We are the sole supplier, for example, for the heavy industries in the UAE, and we benefit from the growth in the UAE. We're quite positive. You look at the GDP number of about 5% growth, and our outlook for the UAE in the coming years is extremely optimistic, given all the activities that go on. And definitely data centers will need power. And some of that power will for sure come from gas. And we are the ones who can provide the gas to those data centers.
Yeah. Are you confident that you have enough gas to supply to those UAE customers?
ADNOC Gas benefits from a long-term supply arrangement with ADNOC. So when ADNOC increases its production, we benefit in form of more gas coming to us. We process that gas and sell it into the international market, but also, like you just said, largely into the domestic market. About 2/3 of our gas flows into the UAE, keeps the lights on, makes sure there's cooling, you name it. And as I said, petchem, data centers, heavy industries, and the power sector are all supplied by ADNOC Gas.
Yeah, so interesting. Peter van Driel, CFO of ADNOC Gas, thank you so much for coming on. It's been a big week for ADNOC with that investor majlis earlier on in the week and the big dividends announcement. We appreciate you making the time for us. Now, South Africa's Reserve Bank governor says sustained low inflation has led to lower and stable interest rates, which has been good for investment, employment, and growth. Lesetja Kganyago told us why the central bank's preference is to keep inflation at the bottom of the target range.
Our real yields in the bond market are very attractive relative to elsewhere. That counts for something. And the fact that we have had inflation decline and we have expressed a preference to keep inflation there gives any investor in the bond market an assurance that the inflation surprise embedded in the bond yields had been dealt with.
That was South African Reserve Bank Governor Lesetja Kganyago. And coming up, how Africa is cashing in on the global trade turmoil as supply chains shift, with the continent emerging as a new hub for agriculture investment. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Shimana Bersechi in Dubai. Africa is cashing in on global trade turmoil. The continent is drawing Chinese and Gulf investment into its growing agricultural sector as investors move away from U.S. suppliers. For more, Bloomberg's Ndiro Ganga joins us from Kigali, Rwanda. So Gulf countries, China positioning themselves in Africa amid the shifting trade dynamics. Tell us more.
Good morning, Jumana. So Trump tariffs and AGOA almost created some sort of confusion in Africa where farmers did not know what to do with their produce. But in every crisis, there's a window of opportunity, and that is Asian markets and Middle East. If we just put Africa into context, 1.6 billion people, 60% of global uncultivated arable land is here. And so that presents so much potential for markets like China and Middle East to tap into Africa and see what it is that they can do. And we're beginning to see China begin to lean towards the idea of distancing themselves from politically charged U.S. imports. What they've done is now begin to open themselves up to African markets. They okayed the imports of Zimbabwean blueberries for the first time. Gambian cashew nuts and groundnuts can go there, and even Ethiopian soybean. And all this is just signaling that while the U.S. is adding hurdles to trade, China is working very hard to remove. In fact, it has removed imports from African goods that have diplomatic ties with them. So what they're trying to do is distance themselves, particularly from the volatility that comes with this new Trump era. And it's not just China that is doing that, investing on the African continent. We're also seeing that with Middle Eastern countries. UAE, for example, $6.5 billion will go to Ghana for irrigation and a fertilizer plant. But when all is said and done, not all of these big projects have paid off. Some have failed because of systematic and structural issues in Africa.
Yeah. Is this welcome interest out of Africa? I mean, how do these deals differ from some of the initial pilot projects?
That is the core of this new wave of deals that we're seeing. Initially, we would see that most of these deals would just be plant the produce and then export the raw materials to these markets. But this time around, we're seeing a shift. There'll be social and also economic development, where there'll be development of infrastructure, creation of permanent jobs, exchange of knowledge and technology, and some of the goods that are produced in Africa will remain in Africa for consumption. And Angola is coming up as this test bed. So far, land that will be cultivated for these projects will remain state-owned, and this allows the state some form of control over how these projects turn out. And also, there'll be like $350 million Chinese investment into Angola. And this goes into planting of soy, corn, and grain. And it's not just that, they're also striking deal with UAE, they're striking deals with Brazil to plant at least 2 million hectares of land in this country. They're also looking to court Japan. So we are seeing a lot of interest coming up, and they want to diversify the economy away from oil and double agriculture's contribution to GDP to about 23%.
Great stuff. Bloomberg's Ndiro Ganga in Kigali, Rwanda. Well, let's just take a moment to recap. It has been one of the most significant weeks in the Middle East since the war in Gaza broke out more than 733 days ago. U.S. President Donald Trump says he will travel to Israel to be on hand for the release of hostages under the terms of a deal to end the war in Gaza. Israel's Prime Minister Benjamin Netanyahu's security cabinet met late on Thursday to sign off on an agreement that would see Hamas release all remaining hostages in exchange for 2,000 Palestinian prisoners and detainees. But many questions still remain of what lies ahead. Phase 2, the implementation commitments by the two sides. The war in Gaza has devastated the Palestinian enclave and destabilized much of the region. And after a long 2 years, all eyes now are on Egypt and whether this deal signing next week will bring that long-lasting peace to the Middle East. That's it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.